I am Arunnath Gopinathan. I would like to start this video by apologizing to everyone for not sharing the information that I had known for few years. I didn't share this information because I was greedy. Uh, like I thought I will make lot of financial progress by using this information. But after reading Bhagavad Gita, I got a change and I thought I would share this information with everyone so that everyone will be financially protected from the big disaster that is going to come. Usually, if you know about certain disasters, greedy people used to make profit out of it. So today I am going to explain about an upcoming disaster, a financial disaster. To be precise, it's a recession, and I fear it might turn into a depression as well. So, everyone, beware and be careful about your financial decision. This video is going to take a lot of time. If you have the patience to listen to this video and understand the video and research upon the contents that I share to you, you might sometimes be protected from the coming financial disaster, and maybe you can also make a lot of you can save a lot of money and you can make a lot of money and you can become ultra rich from this video. So the amount of patience that you give right now is the effort and the input that you are going to put for the future financial success. So let's start the video. So usually all the processes, like all the living beings and everything, grows and thrives and sustain in a particular mathematical ratio. Like if you see, uh, if you measure different lengths, if you measure the ratios of different lengths of things, everything is in a ratio, and and that ratio is called as golden ratio. If you observe everything around the universe, everything exists in a golden ratio. If you see Mona Lisa, it is in a ratio. And if you see your face, uh, the distance between your eyes, the ratio of your nose, the length of your lips, everything is in a ratio. And if you see seashells, the design of the seashell is also in a ratio, and this ratio is called as golden ratio. And if you see plants, like the arrangement of petals inside this plant, it is also in a golden ratio. So everything works in a golden ratio, and this golden ratio was invented by a mathematician called as Fibonacci. He started measuring different things in the world, and then he came with a ratio, and this ratio has a set of numbers. You can do more research on golden ratio and uh, Fibonacci sequences, and you can use it in your career, like uh, to understand and observe all these golden ratios and Fibonacci sequences. So there is another mathematician called as Elliot. Elliot further did research and find out a theory called as Elliott wave theory. So what he says is everything in the world grows in a wave pattern and decays in a wave pattern. This is called as Elliott wave pattern. Explaining more about it, I will explain it with an example. So what Elliot says is, Sorry for the disturbance. So what Eliot says is, if a system grows x times, if a system grows for x times, say you are going to gym, so you will be motivated and you will go for you will there will be the motivation will be x times, and once you are motivated and once you start doing it, after some point laziness comes to your brain, and that laziness will demotivate you from going to the gym. So that demotivation will be like 30 percentage 30 percentage. So when you are motivated for x times, then you will be demotivated 30 percentage of its time. And once when you get demotivated and when fats start accumulating in your body and when people start teasing you, like after even after going to gym you are accumulating fat and everything, again uh, an ego hits in, and that ego will motivate you to hit to go to gym and do more workout. So that motivation and the amount of investment that you have given to the gym will motivate you, and this motivation will improve your workouts in a 1.618 percentage times. So these uh, these years will motivate you to uh, do more workout, and the amount of workout that you will be doing after this motivation will be 1.618 times, which is the golden ratio. uh, See over here, like ratio between two numbers that equals approximately 1.618 times. And when once you attain more success, again you will be lazy, and there will be a 30 percentage demotivation again. And after this 30 percentage demotivation, uh, same fear comes in, and then again you improve your efficiency out of the demotivation, and go to the gym again. And when one full wave happens and you attain the utmost, you achieved your goal and you are sustaining in that goal, like you are maintaining your body for some times and you are fit and you are gaining those benefits. But once when it become monotonous, you will start feeling bored, like you will start feeling boredom, all the appreciation is over. So then that demotivation will uh, bring down your success to the 30 percentage of the total growth you attained. So this fall will be 30 percentage of the total growth that you gain. So this is Elliott wave, and so this become one cycle of the Elliott wave. After this, it moves into bigger cycles, meaning I have copy pasted this small Elliott wave over here. So this was our first cycle. Then a bigger cycle starts, and that bigger cycle is also the limbs of that bigger cycle. Each and every limb of this bigger cycle is a smaller Elliott wave. And when this big wave when this big wave ends, then there is a 30 percentage fall for this big wave. This becomes the first wave of another Elliott wave, and that's how everything evolves and that's how everything developed. I explained it from the perspective of gym. You can see this pattern in everything, even in your life, your career growth, your intellectual growth, your financial growth, everything. So if this pattern exists in the universe, and if the universe works on this pattern, then obviously our financial system also work in this pattern. And uh, this is what Elliott wave theory suggests. Uh, I will once again show you for the Elliott wave pattern. So this is how Elliott wave works, and it has five waves: wave 1, wave 2, wave 3, wave 4, and wave 5. Once this five wave happens, then there is two declining waves: wave A, three declining wave A, wave B, and wave C. And there are certain internal Elliott wave with which this is created. So this is how the whole system works, and this is how the financial markets work. Now I will explain the financial market with uh, the example of Nifty 50. So I will explain what is Nifty 50 first. So there are two stock markets like in India. One is NSE, National Stock Exchange, and the other one is Bombay Stock Exchange, BSE India. So all the companies, if companies want to raise certain money, they sell their shares to the public, and that shares uh, is being traded among the public. So the process of selling to the public is called as IPO, uh, and once it is being sold to the public, that shares are traded among the public, and the platform where they trade in India is through two stock exchanges. One is National Stock Exchange and another one is Bombay Stock Exchange. So National Stock Exchange select 50 best companies to uh, measure the growth of the country, and the growth is measured using an index called as Nifty 50. So Nifty 50 has 50 companies, and these companies are being selected by the National Stock Exchange, and I think they select these companies every 3 months or every 1 month. So the financial analysts in the National Stock Exchange decide which all companies should enter into Nifty 50, and of the Nifty 50 companies, around 1990s, the total share value was considered as 1000, and based on the financial growth or financial decline, uh, the share values changes, and accordingly the Nifty index value also changes. That's how this works. Say share value of all the Nifty 50 during 1990s were 10,000, then that 10,000 was equivalent to 1000. Now in 2020, all the share values become 1 lakh. So the Nifty value become 10,000. So this is how the Nifty calculation happens. So first tip for your financial success is avoid shares that are taken out by the financial analyst from Nifty 50. That will save your money. That's the first advice that I would like to give. Moving further, so if this Elliott wave pattern exists in universe, does this thing exist in the Nifty index chart as well? Let's see that. So I'm taking Nifty 50 chart. So if you observe Nifty 50 chart, and I have taken it in a monthly way, so you will see that this become the first wave, we observe it, this become the first wave, this become the second wave, this become the third wave, this became the fourth wave, and this became the fifth wave. So this is in an immediate wave pattern, and you can compare it. Like I'll show you the image of the immediate wave. See, first wave, first wave, second wave, second wave, third wave, third wave, fourth wave, fourth wave, fifth wave, fifth wave. So, and this happened approximately for, maybe we can say it as, they started this wave around 2001 to be precise, and it's running now for almost till 2025, and the wave ended, the fifth wave ended almost around September 2024. If the rise is done, then what is going to come? It is obviously fall. So as I have stated before, uh, let's take the first wave. I am going to zoom in a little bit. And so how much percentage did it decline? And let's see like the time frame as well. The first wave ended around 2008, and there was a recession during 2008. So is it already pre-planned? I don't know. Maybe it's a, I don't know whether it's a pre-planned thing, but exactly around 2008, the recession happened, and let's see how much percentage it fall. That is also coming as a Fibonacci ratio. So it fall exactly 0.786. This is a Fibonacci ratio, and 0.618. So between these two ratios, it consolidated, right? Now, after the consolidation, how much rise it took? Let's measure that as well. It took a rise of 161.8%. And if you see this rise, it's another Elliott wave. If you see this rise from 2009 after the fall till Corona, it is another Elliott wave. I'll draw that Elliott wave as well. So this becomes another Elliott wave. First wave, second wave, third wave, fourth wave, and fifth wave. And it ended exactly at a Fibonacci ratio of 1.618%. So after this 1.618%, uh, there was a sideways move, because whatever is being accumulated or bought by the big investors or big super rich community has to be sold, and they sold it from August 2018 to August 2020. It took them 2 years to sell the whole thing, not the whole thing, some part of it. And then after, when they have successfully sold it, they brought the market down. On what basis? In the name of Corona. how exactly after 1.618 percentage growth, Corona dramatically came and shook our market down. We don't know. We don't know how, but Corona came because that's how the nature works. Yeah. So Corona came, all the share price fall, and then the big companies start accumulating again. And once when they start accumulating, once they started accumulating, then they took the market again up, and they completed the fifth wave. So once if the fifth wave is done, which is a long growth of 25 years, there should be a fall that is going to come, right? So how much percentage will it fall? According to this first wave, it should fall for 68 percentage, or let's see how much percentage did Corona ate. So if you see that, it it also it here also it fell for 61.8 percentage. 61.8 percentage of the total wave. So how much fall will this big wave give? It should be obviously 61.8 percentage. So let's calculate till what point the Nifty is going to fall. So Nifty will fall up to 10,553, or at least 16,608. So what I am uh, what my assumption is, uh, mostly the wave has to fall like this from here to 16,608 distribution, then a rise, and it will fall till 10,000. So there is going to be a 60% decline in the Indian economic growth. And if this does not uh, give you a confidence, let's take the bond yield. So for the people who does not understand the bond yield, uh, you know how bank work, right? So you give your money as FD, that is being given to someone else as loan, and the bank takes say 15% interest from the loan. Bank of the 15% interest, bank keep 5% as the profit of bank and give you the 10% interest as your FD interest. So this is how bank works. Similarly, Indian government take money by selling you bonds, and that bond is being utilized for the development of the country, and government gives an interest in the form of bond yields. So say you will not get your FD if the bank collapses. Similarly, you will not get the invested amount if the Indian government collapses. So this government bond is more stable than the bank FDs, and this bond value uh, shows the strength of the Indian economy. Because if Indian economy is strong, then people believe that India is not going to collapse, and uh, they buy the bond. So this is another indicator that shows the strength of the Indian economy. So if you see here the bond value from May 9th, there is a big fall of 3% in the bond value to 100. It was 103, 102.8 something, and it fell sharply to this to 100. So uh, this shows Indian economy is weak. Coincidence of these two. And who sells this bond? Usually we get these bonds through the banks. And so banks had bought the bonds at the rate of 103. Suddenly there is a 3 rupees fall. So the banks are forced to sell this bond 3 rupees less. So it's a loss for the banks. And if you see our Indian Nifty 50, almost 30 percentage of Nifty 50 uh, is controlled by the banks. I will show you the major banks. First one is SBIN. There is HDFC, HDFC Bank, SBIN Bank. Then there is ICICI Bank, Kotak Bank, Axis Bank, like that. So if there is a loss for the banks, automatically that loss will be reflected in the share price of these banks, and that share decline will bring down the Nifty 50 value. So once when this value comes down, once when the Nifty 50 value comes down, automatically if you are invested in mutual funds, your portfolio values will come down. And my assumption is it's going to decline 60%. Say if you have a savings of 1 lakh, that 1 lakh becomes 40,000 and you will lose 60,000 rupees. Uh, so this is the message that I would like to convey. Moving further, uh, where are these money being invested? Who all are going to, who all are going to affect? Major health insurance companies have investment in these shares, and all the mutual fund companies are ultimately buying and selling these shares. And some mutual fund companies also buy and sell bonds. So if the share value goes down, the trust on mutual fund companies decreases, customers decreases, thus many mutual fund companies will be forced to shut down, and there will be a lot of unemployment in the mutual fund sector. And that unemployment, the effect of that unemployment will move to different other sectors. Like say if 1 lakh uh, employees of mutual fund companies are being unemployed, automatically 1 lakh customer, they might be buying cars, they might be buying flats. So there is a 1 lakh customer decline or sales decline in automobile sector, in luxurious sector, in realty sector, in real estate sector, and everything. And majority of health insurance companies have also invested in these sectors. So if the share price goes down, then health insurance companies will not have enough capital to sustain or pay the medical bills. So that will affect the health sector and employees working in health insurance companies. So again, that unemployment will also add up to other sectors like automobile, real estate, reality, luxurious items, cosmetics, everything. So if there is sales decline in other sectors, there will be unemployment in those sectors, and that unemployment will propagate to all other sectors, and there will be a huge unemployment crisis, and that crisis will take our country to recession and sometimes depression as well. And that depression is in a scale that we have not seen till now, because the 2008 recession or 2020 corona recession, these are like a minor recession compared to what is going to come right now. So I cannot interpret, I mean, I can mathematically tell the scale of the destruction that happens, but I cannot interpret like how it is going to come or how they are going to show it to the world. So this is the situation of Indian economy. So there is going to be a widespread unemployment and there is going to be a decline. Say if the share market fell and if there is unemployment, people will not buy real estate, people will not buy flats, people will not buy automobiles, people will not buy jewelry ornaments. So there is less buyers. So you are unemployed, and when you are in a panic to sell your asset, you won't be able to sell it at the price you buy. Already there's a decline, and because of the fear, people will not buy, and there is less demand, and there is a depreciation in all your assets. So kindly stop investing in stock markets, mutual funds. Stop investing in luxurious items. Stop investing. Stop buying flats. Stop buying assets in urban areas because these are highly overpriced and these are in a bubble. And when the bubble bursts, you will lose a lot of money. So this is my humble warning. Uh, have cash, keep cash, and once the price goes down, then try to accumulate. Even though I said all these, uh, how long will it take? So, according to time cycle theory, this happens every 12 years, like from 2000, approximately 12 years, from 2000, Satyam scam till 2008, it was almost 8 years, and then there was a fall for 2 years, and from 2008 it took another 12 years, that is 2020, for the next fall. So approximately it will take another 12 years for the fall. So the next fall is supposed to come around 2032, but already according to the Fibonacci ratios, Nifty 50 have already touched the maximum it can touch, and till 2030 31 the market is going to be sideways because all the asset that is being bought from this point to from 1990s to 2003 need to be sold. So they need a minimum of 7 to 8 years to sell all their asset. And whom are they going to sell? They are going to sell it to us. And if you are brave enough, please avoid buying what they are selling because they are trying to dump their shares on you. So please don't become a fool and buy and start accumulating. Avoid all your investments and have cash with you. Don't be greedy. It's fine if your asset is not growing. You are protecting it from decay. It's another way of investment. Never be in loss. So don't become a fool and buy because they have bought it for pennies like 100 300, and now they are selling it at 27,000, which is almost 900 900 I guess 900 or 9,000 percentage profit. So this is how the big players play. And once when you are forced to sell all your assets, all your real estate, all your gold and everything at a cheaper price, they accumulate everything. So once when you fall from a middle class to a poor state, they accumulate everything, all your assets, all your efforts of these 25 years for pennies, and then they will enjoy that. So don't become prey for that. Now, uh, this is let me see if I can show you. I'm not pretty sure whether I will be able to show you this Elliott wave pattern. You might be thinking, okay, let's leave India and let's invest in US. So if you see Nasdaq, Nasdaq, even Nasdaq is in an Elliott wave pattern. First wave, second wave, third wave, fourth wave, and fifth wave. So Nasdaq shows the US IT companies, and let me look for Dow Jones. If you observe Dow Jones, even Dow Jones is following an Elliott wave pattern. First wave, second wave, third wave, sorry, first wave, second wave, third wave, fourth wave, and fifth wave. So US, similar situation is going to happen in US. So investing in US market is also not good because it's also in a uh, it's also going to have a recession. And let's see European market. So let's see how DAX perform. So if you see DAX is also having an Elliott wave pattern. First wave, second wave, third wave, fourth wave, and fifth wave. So you cannot do anything. So if there is recession in US, if there is recession in Europe, there won't be projects coming to India or other developing nations. If there are no projects or investments coming from developed nations to developing nations, there will be another higher chances of unemployment. Especially the IT sectors will hit, will have a major hit because majority of IT projects comes from the developed nations. Majority of investments comes from the developed nations. So there will be less uh, developments in the industrial sectors, and that will create a bigger loss, and there will be less IT projects. So if there is less IT projects, IT sector will become hit, and lakhs of people will have will be unemployed, and lakhs and crores of people will think of selling their properties, but nobody will buy it. They will sell it for penny money, and all the sectors will fall, and it's a global recession uh, because all the elite waves are coming to an end. And if it's a global recession and no country is able to support other countries, automatically there can be a loss of many countries. There can be big calamities. The reason for bigger calamities is we have to uh, say uh, the politicians and the bureaucrats and the rich who dump these shares have to uh, give a reason, like why this fall happened, and that reason should not become a blame upon them. So they create something, some drama before the fall, and that had already happened around 2008, and that had already happened during corona 2020. So that reason can be anything, and that can be harmful for our life as well, because uh, justification for 2008 is a recession, and justification for the fall of 2022 is a harmful disease called corona. What can be the justification for the bigger fall that is going to come? That justification can be some other bigger unimaginable reasons that I don't, my small brain cannot interpret. So it can take a lot of lives, it can bring harm to a lot of life. So be careful, save your life, protect yourself, and once you save your life, protect, and you protect yourself and you have a lot of money, then you can buy all other assets which whose values are going to become penny. You can accumulate everything and you can become super rich. I am not greedy, so I just shared you all these informations. Become super rich, enjoy your life, and be safe. And understand uh, why the catastrophe happened, who all got benefit, uh, and don't become fool uh, by listening to the reasons that the bigger players or the ultra rich are going to portray, or the politicians are going to portray in front of you for the justification of this fall. Understand it, it's a game. That's it. So I bless everyone. Take care and enjoy your life. uh, I can add, yeah, enjoy your life. This is enough.